And India's economic growth has halved from the pace set in the first quarter of this financial year. The latest GDP figures released earlier today show how the economy growing by 6.3% in July-September versus 13.5% growth seen in April-June. The figure is lower than the 8.5% clocked in July-September last year. While the agriculture and services sectors along with construction have been shining beacons this quarter, the manufacturing sector that incidentally has large weightage on the total GDP contracted by 4.3% this quarter. The mining sector also contracted sharply by 2.8%. Interestingly, the growth rate tops of the estimated band forecast by the RBI in its October review. Let's also now hear out India's Chief Economic Advisor Anand Nageswaran on what he makes of India's growth in the quarter gone by.
Other indicators of service sector activity have expanded quite ably and quite robustly compared to the 2019 levels, as you can see in this. Private consumption growth rate has rebounded levels, as you can see in this. Private consumption growth rate has rebounded, which is good news because that shows that households are in general optimistic about their income prospects and employment prospects. On the right side, you can see that this improved balance sheet on the part of the banking system has also been accompanied by a willingness to lend. Credit growth is all around. It is not just concentrated in one sector. Credit to MSMEs is particularly strong, and that is gratifying. Clearly, a very strong momentum in credit growth, and the demand for credit coming from all sectors points to continued economic momentum and growth continuing. As far as the growth numbers are concerned, that is why India's growth estimates, which were to the north of 8% or even 9% at the beginning of the year, it has come down to between 6.8 and 7%, precisely because global growth has slowed down and monetary tightening is happening, still underway in the developed world, and export growth will not be able to contribute as much as it did last year, and that is the reason why these estimates are have come down from the beginning of the year.
Business Today TV's managing editor Siddharth Zarabi had a chance to decode the Q2 GDP figures with a couple of economists on what they make of India's GDP print, and here's a slice of that conversation.
GDP growth of 6.3%, as you said, is very much in line with market expectations and our expectations. And while, the number looks lower when you compare it to what we had in the corresponding period of the previous year, but if you look at it on a sequential basis, this would be an improvement of more than 2%, which is a positive aspect. But yes, what is very concerning to me is what you spoke about, manufacturing sector contracting by 4.3%. I feel it could be because of this component of trade, hotel, transport and communication doing much better than what was expected, because we had seen a strong contraction in that in the last quarter compared to the pre-COVID period.
Would it be fair to say that the consumption side of the Indian economy is robust, kicking, choose your phrase as you like it, but the core manufacturing industrial side is suffering because perhaps the pent-up stuff has run out of steam and the export side is going down, and that larger sort of capital-led investment is therefore showing up in these numbers? Would it be a fair assessment?
So I think, Siddharth, let's just back up a little bit, to where we were discussing about the domestic demand. And that is exactly the story that came out, just a minute later as we were discussing it in the actual numbers.
Yeah.
The entire world is currently looking at India as a bright spot. We are actually seeing that this is one of the few economies globally where, despite high inflation levels, you're still seeing an increase in consumption demand. So that story continues to be strong. And the strong growth in the agriculture sector shows that it's not only urban demand, but there's a strong growth even in the rural sector. That's coming.
Is that so, Mithali? Is that so, or is it just the fact that we didn't see too much weather-related disruption? Is it just a factor of productivity rather than demand? Because a lot of the production would head into warehouses, the MSP-driven stuff. Why would you link it to rural demand, which anecdotal data and other kind of data suggests has been suffering a bit.
So I think, Siddharth, to some extent, there's also government consumption spending that has to be credited for this. The government spending happened in the right areas. It happened for social protection during COVID, which resulted in a situation where during COVID, you didn't see households suffer as much as they would have without the government support.
Okay.
So when you have the free cylinder scheme, when you have, the food grain scheme, then you have a buffer, you have a social safety net that was actually given to a lot of rural households.
Okay.
So you see that, this new consumption growth that's starting to come, this, reversing of the trend post-COVID, that is actually panning out pan-India, not just in a urban, it's not just an urban story.
Would it be fair to argue that the agriculture part of the economy is more dependent on weather gods and of course states and center doing their bit for our farmer? But that is not truly reflective of the real state of the economy. Industry, consumption and government's own data that we just spoke about suggesting that things are not fully in balance, Rajani.
Definitely things are not completely balanced. Consumption is a cause of concern, and on consumption we are getting very mixed signals. So if I just look at the first quarter GDP number, I'll have to look more closely at the second quarter GDP number. But even the first quarter GDP number, we had seen that consumption, when compared to the pre-pandemic period, had recorded a good growth of 10%, which is pretty good. I'm talking about pre-pandemic period, so removing all the base effect. And then a lot of other indicators of consumption like auto sales, GST collection, they have all been recording very robust growth. But like I mentioned earlier, there are some other indicators like IIP, consumer durables as well as non-durables, which are not very good. We have had FMCG companies highlighting that the rural demand is still weak. So yes, there are very mixed indicators coming on the consumption front. And another point to note is that if the manufacturing sector is contracting, that also speaks about consumption. So it's kind of very surprising that if the consumption GDP is showing a growth, private final consumption expenditure, then why would the manufacturing sector record such a sharp contraction? So definitely all is not balanced and consumption cannot be very strong if manufacturing sector is recording a contraction on a IOI basis.
Mitali, you want to add to the future possibilities? Rajani has given us her numbers. Are there any numbers that you are working with for the remaining part of the year?
I think that going forward as an economy, we need to diversify our fuel sources. We need to see more and more investments coming into clean energy. We need to see more investments coming into the manufacturing sector. And the dismal performance of the manufacturing sector despite the production-linked incentive schemes is definitely a cause for concern. It shows that at this point in time, the government needs to be investigating which production-linked incentive schemes are doing well,
right,
and increase the spending on those.
We had a fantastic base for the first quarter, and that is now clearly behind us. What we are also seeing is normalization plus, Rajni, and that is a point that I want to address with you as we quickly wrap down the show, which is the impact of the monetary policy hikes. The number is 190 basis points from May itself, and perhaps one more hike coming very soon. So that is also something that we should factor in as far as the numbers are concerned, because 6.3% versus the overall median estimate, if we were to sort of do a median of all the major polls, was around 6.4%. So not terribly off. How would you respond to those 2 points that we just made?
Hike by RBI in the December meeting, but we are expecting the rate hike to moderate to around 35 basis points as against 50 basis points that we have seen in the past. Yes, I agree with you that we will, there is some impact of monetary policy tightening that has happened so far. And in fact, more of the impact we'll see going forward because monetary policy takes few quarters for the impact to be seen.
Very quickly, Rajani, very quickly, what's your full year number now that you have the Q2 numbers before you?
So we are expecting GDP growth in the range of 6.8 to 7% for the full year.
And for you, Mithali, what's the full year number you are considering?
I think it's about 7 to 7.2 for the full year.
On to the markets now. The bulls were in complete control of Dalal Street with the frontline indices clocking in fresh highs yet again. 7th straight day of gains with the Nifty ending just above the 18,750 mark and Sensex closing above the 63,000 mark. Mahindra & Mahindra, Hindalco, Grasim and SBI Life were amongst the top gainers today, and thus flashing on your screens right now. While on the losing end, it was a lackluster day of trade for the banks with IndusInd and SBI closing the day with cuts of nearly 1% each. Chinese company Alibaba has reportedly diluted its stake in Zomato to 10% from 13%. The e-commerce platform likely sold 26 crore shares for about $200 in trade today. The Zomato stock was up 3.5% in today's trading session. So what is really next for this particular stock? Here is what Devam Sharma of Green Portfolio has to say.
Alibaba Group is planning to sell a stake of around 3% in Zomato worth $200 million through a block deal. Earlier also, the company's co-founder Mohit Gupta resigned and the stock is actually down over 60% from its 52-week high. So what are your thoughts on Zomato and where is the stock headed according to you?
So if you look at the Zomato's balance sheet, the debt is almost insignificant. There is in fact a significant cash on the books on the balance sheet. If you look at the market is further consolidating with news like Amazon going out of the food delivery business, which is a very positive news for this duopoly business, which is Swiggy and Zomato. The worst news, which includes exit of some of the senior officials or exit of some anchor investors or fall in valuations in global tech product companies, is already factored in. Like the guidance of the company also says that the company on a broader level will be operationally profitable in the next 2 to 4 quarters if you keep aside the quick commerce business. Right? So profitability is also coming.
Let's now take a look at all that is making news in the corporate world. Tata Group is reportedly in talks about iPhone manufacturing plant of Wistron in India. The deal is pegged to up to 5,000 crore rupees, will propel Tata into the major handsets player league. It will also be a challenge for China now, the dominant player in electronics manufacturing. Samsung India is planning to hire around 1,000 engineers for its research and development institutes across India. The engineers will be hired from top institutes like IIT in areas like artificial intelligence, machine learning, computer vision and VLSI. Time now for a very short commercial break. Later in the show, India Incorporated bids a heavy goodbye to one of its brightest stars. Bringing you this in more moments from now.